Welcome to the July update for the Hopkins Group Managed Discretionary Account portfolios. We've just come out of the July Investment Committee meeting and are very pleased to report that over the last 12 months, the portfolios have performed well above expectations. The main sort of part of the outperformance really has been around the decisions around the value that we've been able to create from investing in value managers and perhaps changing the asset allocation mix throughout the year. I'll report more on that in a separate video, but wanted just to highlight some of the things that we discussed during today's investment committee meeting. And while generally markets are pretty positive, there is still some concerns around what's going to happen, when the interest rate increases that we've had continue, and they're expected to continue those interest rate increases when they start to really hit the consumers. And we talked about sort of the reporting season in the US with the banks over there, reporting good numbers, but also increasing their provisions for bad and doubtful debts, which is a leading indicator potentially for further trouble down the track, but also sort of reporting that credit card usage is starting to change and shift a little bit as well, which again sort of shows signs that the consumer is potentially under a bit of pressure. With overall situation, you're seeing inflation rate starting to come down, again as a bit of a result of the interest rate rises that we've had so far and consumers starting to slow down. But you're getting mixed signals as well, because there's some strong job numbers. US, they reported 200,000 new jobs, which was down sort of from the 300,000. So it is sort of showing signs that the contraction's starting to occur, but still, 200,000 new jobs over the quarter is still pretty strong numbers. And you're seeing a bit of the case in Australia as well. So the real difficulty that we're having as an investment committee is sort of whether this is the start of a new sort of bull market, or we're started to see the bottom, or is it just a rally based on the good economics and some companies that are performing particularly well, and that's the challenge that we're having at the moment around the investment committee. So with regards to your portfolios, generally they are a little bit more on the growthy side, but still relatively neutral with the market. So the neutral with a bit of a growth bias, I guess, is probably the right way of describing how the portfolios are positioned, and that hasn't changed this month. We're sort of again discussing what future changes might look like, particularly if those economic signs of the slowdown start to come through, and that when markets look like they're starting to bottom and I mean, even though they're up a bit, but when they really sort of start to show that the economic changes are starting to come through and that things are going to start picking up in 12 to 24 months, we're looking to increase sort of some of the exposures to smaller companies, both in Australia and global smaller companies, and also perhaps some of the more growthier stocks. But we're just sort of feeling that the time's not right for that, and we've still got sort of that little bit of a neutral stance. So, if there is a pullback in markets after a strong run, we're going to still be able to protect some of your capital with that, and then, perhaps look to make some of those longer term changes later in the year when the interest rates start to bite. So thank you for listening, and thank you for being part of the Managed Discretionary Account, and we look forward to another successful year in 2024.